Hey everyone, this is Mark Treichel and welcome back to another episode of With Flying Colors. In today's episode, we are diving into the governance side of Alco, asset and liability management committees. Todd Miller and I will discuss best practices for structuring Alco charters, defining roles and responsibilities, and fostering an effective governance culture. Whether you're part of a small or large credit union, this episode is packed with actionable advice to strengthen your credit union's foundation. And here we go. Here's the episode. Todd and I discussing all of the above. Todd, how are you doing today?
I'm doing good this morning.
Very good. Glad to hear it. And today we're going to talk about asset liability. And I got to go to with the acronym. NCUA loves their acronyms. ALM. We're going to talk about ALM, and specifically, we're going to talk about ALM reporting and different nuances that might relate to that. But Todd, before we jump into that, most of our listeners have probably know what your background is, but we might have some first-time listeners. If you could give a little bit of your background at NCUA and what you did there before retiring a few years ago and switching teams like I did.
I retired in 2021 after 34 years with NCUA. I think I can probably break my career down into three big, broad parts. The first third of my career, I spent it as an examiner and a problem case officer. The middle third of my career, I spent that as a regional capital market specialist, even developing a lot of NCUA's policies and procedures around ALM and liquidity and doing all the training for examiners. And then the last third of my career from 2009 and on, I had a lost year at Westcor with you when they were in conservatorship. But then I spent the last decade of my career as a director of special action, supervising problem case officers, dealing with troubled credit unions. And I also supervised regional capital market specialists and regional lending specialists in that last third as well.
So that fits perfectly with this topic of ALM reporting. As they say, you've forgotten more about ALM than I ever knew. So I'm looking forward to walking through this topic and provide credit unions with some key points on some things that they might be doing. So with that, I'm gonna turn the keys over to you, and I'll jump in here as appropriate.
I have a feeling you remember more than you give yourself credit for, Mark. So today we're going to talk a little bit about Alco reporting. Most credit unions, they have an Alco committee. They have a finance committee. They call this different names, but generally there's a committee group of people in charge of managing interest rate risk, liquidity risk. More and more today, Alco committees are becoming an overall risk function. They're in charge of managing capital and credit quality as well. It's very difficult to manage liquidity and interest rate risk if you don't also have your fingers in that pie of managing credit risk and capital as well. Before we talk about Alco reporting, maybe let's just go back and talk about Alco in general, because these are the committees that manage it. Most credit unions and very large organizations, what you'll see is committees will have charters. In smaller organizations, these committee functions will be laid out within policies, an ALM policy, a liquidity policy, a financial management policy. I would just recommend credit unions, even at the smaller size, start thinking about developing charters for their committees, where they're putting these in one spot rather than having 5 or 6 different policies saying, and Alco is responsible for A, B, C, and policy in the ALM policy. Alco is responsible for X, Y, Z in the liquidity policy. I think it's better to just follow the template that large organizations do and create a committee charter and put this committee all in one spot. And then let's talk a little bit about, before we talk about reporting, what should be in a charter or what should be in your policy statements regarding an Alco committee. We'll use the term Alco today, even though a lot of credit unions name this committee different things. In a charter, they should lay out the purpose and role of the committee. What is the committee's purpose? Are they going to oversee that interest rate risk, liquidity risk? They're going to be in charge of capital adequacy. They're going to have credit risk in it or not. I do think all those pieces should be in it, but that's not always the case. Some committees keep credit risk and other parts of the risk management in other committees. But either way, they should lay out purpose and roles of the committee. They should specify who's on these committees. Alco committees are generally drawn from a wide range of staff. Usually you have a CEO, a CFO, some lending people, some member service people, occasionally a marketing person on there as a non-voting. Um, Over the years, what really gets to become a challenge for board is, do you put board members on these committees or not? In smaller credit unions, especially, you'll see examiners recommend that board members be on these committees. In larger credit unions, it's very difficult to put an unpaid board member on a committee that has a very significant hour and time obligation. So in a lot of organizations now are mid-sized and has larger credit unions, you end up seeing a staff Alco that handles those everyday tactics and strategy adjustments. And it's not uncommon to see a board risk management or a board Alco that's separate, that meets less frequently. Like I said, I think it's very challenging to put board members on something like an Alco because there's a lot of daily work and board members are not really paid for that daily work. Your committee charter should outline your meetings. How frequently do you expect them to meet? Under what conditions? Basic responsibilities of the committee. What are they going to be responsible for in terms of different risk categories? The committee's authority. What can they or not do? Are they responsible for pricing? Do they get to change investment strategies? Can they change lending strategies in the midst of a business plan as conditions change? You should lay out just exactly what kind of authority they have and responsibilities. Also, I would think for larger credit unions, you should lay out what can that committee redelegate to someone else. If you give Alco pricing authority, can they redelegate that down to a smaller subgroup? And pricing becomes a pretty important function of committees. Your charter's policy statement should specify reporting, and we'll talk about reports in a couple minutes. And your committee charter should lay out what kind of performance metrics, revaluation, review and evaluation are going to be doing. How well does this committee operate? How often do we have to relook at it? A committee charter should probably also lay out what kind of documentation the committee is responsible for. And we'll talk about that in a little bit as well under reporting.
Very good. And so on, a couple things popped into my head, and what popped into it is some of the conversations we've had with credit unions over the past year. And I do remember one situation where an NCUA exam report actually was requiring board participation on, and it was in the mid-size or large category, I would say, but they had actually put in a document resolution. And I remember us advising the credit union, we thought that NCUA had overstepped their bounds there. There were some issues that might have triggered there to be more board involvement in some way, but I was a little surprised to see that NCUA was actually saying these are the types of folks that should be on the committee. And then on the other side, we've had some conversations where more and more, as at the tail end of our time at NCUA, and even more since we left, the position of chief risk officer is more prevalent in credit unions. And we've seen some situations where chief risk officers have been on the committee and have not been on the committee. And also where NCUA was kind of trying to truncate what responsibilities that chief risk officer had as it related to the charters. I guess in general, I would say, as you're building out this charter and who's on it and what the responsibilities are, you might sometimes find that NCUA has questions relative to that. In the end, there's best practices, but there's really what makes sense for you. And there's not a regulation that ties to who should be on these committees, et cetera. Anything based on what I just said there that you either want to correct or maybe opine on?
No, I think it comes back to, you have a board governance structure and the board is responsible for that. And for instance, do you put a chief risk officer or a board member on an Alco committee? I think those are individual decisions by the credit unions, and it has to tie in what are the knowledge, skills, and ability of their entire management staff and directors. Do you want a school board member on your Alco? Probably not. If you have a board member who's a CPA, has been a chief financial officer, chief risk officer somewhere, and has time available and wants to be on the committee, absolutely make room for them if that fits in with the whole culture of the organization. The chief risk officer one, I thought that one was really interesting when one of our clients was told to take their chief risk officer off of the Alco because they thought that was allowing a chief risk officer to be basically making decisions on risk. But as part of that, I did some research, and even in the very, very super large banks, a lot of times the chief risk officers are on the Alco because they're not making individual risk decisions like buying an investment or what have you. They're part of the strategy team. Putting them there actually probably helps their function. It probably helps the Alco when they've got responsibilities over here with compliance and other issues and good risk managers. But, who to put on committees, and not just Alco, but any committee, a loan committee, IT steering committee, or what have you. Those are individual decisions that boards and executive management make. And you structure those based on the knowledge, skills of your people and the needs of the organization. On any given place, maybe that chief risk officer should be on the Alco. At another place, maybe the chief risk officer shouldn't be, because the way you define that individual roles and responsibilities, it's more of a legal compliance ERM, and they don't have the knowledge, skills, and ability to contribute. So I think you leave those decisions to individual credit unions. This is part of board governance and how you set up your risk management culture. And like I said, you put people on committees because it meets the credit union's needs and they have the knowledge, skills, and abilities to be there. Or you put them there because you want to improve their knowledge, skills, and abilities as you prepare them for other roles in the organization.
That's a wrap on this episode on Alco governance and committee charters. If you found this helpful, please be sure to share with your board members and colleagues at the credit union or other credit unions. And don't forget to subscribe for more deep dives into credit union managements and strategies on how to pass your exam with flying colors. Todd, thanks for being a guest again today. And listeners, as I always say, thanks for listening. I hope you'll listen again soon. Mark Treichel signing off with flying colors.